Hello and welcome to The Upside. I'm Emily Anuevo. As we settle into the first few weeks of 2026, there are a lot of questions on the minds of investors. How will markets react to recent job data, for example? What does that mean for interest rates? And how does ongoing geopolitical risk around the world fit into the bigger market picture? In addition, what trends, topics, and questions should investors keep in mind as they approach this brand new year? Our next guest is here to shine a light on the markets, give his perspectives on the state of play, and discuss how some of Fidelity's products could potentially fit in your investment portfolio. Please welcome Fidelity Director of ETFs, Andrei Bruno. Andrei, welcome and Happy New Year.
Happy New Year. It's always great to be here chatting with you.
Always great to have you here. Start of a fresh new year. Now, before we get into the major market themes of 2025 and what you see for 2026, Andrei, if you could just introduce yourself to the audience and specifically explain what you and your team does. I know you touch a lot of design aspects of Fidelity products, really interesting stuff. What does your team do exactly, and what do you take into consideration when creating these products?
Yeah, so in my role, we primarily operate in two silos. So the first silo would be product development. So everything from idea generation all the way up to launching ETF products. And under the hood, what we're constantly doing to support that activity is we continuously have our pulse on the ETF market. So where's money going? What are clients buying? What are clients interested? Where are there gaps in the market in terms of product? Where are there gaps in our own personal lineup for product? And we work with our sub-advisors, our portfolio managers to once we identify a need in the market, how can we bring kind of a best-in-class product to service that need? So again, a lot of research, a lot of running, a lot of numbers, working with who's going to be the PM on that mandate, what are going to be the parameters. So those are the sorts of things that we kind of delve into in our role when we're looking at product development. And with that, it's also just market intelligence too. So just ongoing all the time, what's going on in the markets, whether that's financial, whether that's the ETF market, and keeping our finger on the pulse. And the second silo would be kind of the ETF capital market side. So that's dealing with all the kind of idiosyncrasies with how ETFs trade in market. So, as we know, they're traded on stock exchanges just like stocks. So, what that side of the team does is constantly monitoring how are ETFs trading, are they maintaining, is there, ample liquidity out there for our clients to have a smooth experience? Are the spreads reasonable? Are they being priced intraday where we think they should be? Working with the various market makers on the street to ensure a smooth operation and smooth trading experience for our clients. So those are the two silos that we broadly operate on the ETF side.
Andrei, let's take a few moments to look back on 2025. What year it was. What are some of the biggest themes and market movers that stood out to you for 2025?
Yeah, certainly, if we think back to where we came into the year, the momentum trade, the growthy tech Mag 7 trade was still in full effect. And then we got a tariff tantrum. So, we had a complete reversal of leadership there. What was working before wasn't working now, and what wasn't working before was now working. And then that lasted a short while until we did get the tariff reprieve, and then the momentum trade took over once again and kind of continued into year end. So that was a big theme, the tariffs. It's still overhanging us to some degree. There's still a lot of uncertainty around, what's going to be the long-term strategy here with their tariffs in the U.S. Are they going to continue to hold? But I'd say that's more or less been put on the back burner in terms of what the market's been focusing on. And another theme that we saw emerge during those tariffs is we started to see a diversification away from U.S. equities. So we saw a tremendous amount of flows into international equities. And in fact, last year was the first year in a long while. Speaking of ETF flows here and using it as a proxy for overall flows, is we saw international equities number one in terms of equity flows. So that is a big change in paradigm than what we've historically seen. So what came up after the first half of the year, we got this reprieve and momentum started working again. The question we had was, are we going to continue to see international equities garner interest and garner flows? And in fact, it did going into year end. So that was another interesting theme from a flows perspective. And then, of course, the big theme that everyone talks about, whether you're watching CNBC or you're at a coffee shop, is AI. So that continues to be a big driver for equity market returns. The big question that folks are having now is this going to continue? Mm-hmm. And if it does, how long? So, generally, obviously that held up through the year, and, Q3 and Q4 earnings, everyone was taking a close look at to see if, the earnings were still going to be there on those AI tech names. And, we did see reasonable earnings. A lot of these companies are very well capitalized, to contrast that to kind of early 2000s in the tech wreck when, a lot of these companies weren't cash flow positive, weren't making money. So it's a very different setup relative to that, to assuage some concerns that we could have a repeat of that. And I think that's going to continue to be a theme going into 2026 as well.
Right. So the AI trend, the move away from U.S. equities into other parts of the world, and of course the tariffs. So besides that, what can investors expect in terms of major themes going into 2026?
Yeah, I think the AI theme is going to continue. And again, I think this is a longer term theme that we're talking about here. So I think right now we're still kind of in that phase of, if you break out AI a little bit, you've got the software side, you've got the hardware side, and then you've got what I like to call the bricks and mortar side. So when I say the bricks and mortar, how is AI going to affect the other 493 names in the S&P 500. So I think that's a question a lot of people are grappling with right now, and what that's going to look like to the broader economy over the next 5, 10, 15 years. And as a consequence, how is that going to shape the investing landscape over the next 5, 10, 15 years? So it'll be really interesting to see. So that's something we're certainly keeping an eye on. Another thing to consider for 2026 is, of course, we talked about international equities as well. It still remains an interesting area, and I think the main there's a couple factors at play there. Number one, generally speaking, broadly speaking, international equities a little bit cheaper than U.S. equities, so that makes them a little bit interesting. Where certain jurisdictions are in terms of their economic cycle, particularly if you think about Europe, for example, they're a little further along in the economic cycle than we are here in North America. Now, there's much debate, but where we are in the cycle, most agree we're kind of in late stage, but then you take a look at a recent US GDP print and it was pretty strong. So, do we bump back into the mid cycle? Time will tell on that. So that's another, macroeconomic factor that makes international interesting. And then the third thing I would say for international equities is everyone's been hyper focused on US. So there's a lot of rocks that can be turned in international, and I think some opportunities will potentially emerge there. And my last point is central banks. So the landscape's changing a little bit there as well. If we kind of rewind till end of the year, the amount of cuts that were kind of getting baked in or forecasted by the market, particularly around Canada, was maybe one more cut next year. I think that's moved up a little bit to some extent, but I think the one factor that both the Canadian Central Bank and the U.S. Federal Reserve are grappling with right now is that inflation is a little bit, it's still a little bit elevated. So, in Canada, we have the 1% to 3% band, so there's a little bit more flexibility from the BOC's perspective. We're kind of hovering close to the high end of the band there, that 3%. And the US is similar. They're hovering around kind of the high 2s in terms of inflation, but they also have a dual mandate. So they have to maximize employment as well as maintain a 2% inflation target. So it'll be interesting to see how the central banks react to this current environment with their central bank policy. And given that recent GDP cut, or GDP print that I mentioned earlier for the United States, which was quite strong, it'll be really interesting to see how many more potential cuts the Fed might be able to get in 2026.
Yeah, we'll just have to wait and see the next moves from the Federal Reserve and the central bank here in Canada. Last year, there was a lot of talk about, are we in the mid or late part of the business cycle? What are your thoughts on that going into 2026?
Yeah, I mean, the current GDP print of the U.S. doesn't necessarily suggest late cycle. Late cycle is typically, you typically see kind of a slowing of growth, and we had a fairly strong GDP print. Again, it was one quarter, so, one quarter does not make a trend necessarily. But if we rewind a few years, we were in a similar setup where we were kind of late stage, and then everyone said, oh, actually, I think we're back in the mid stage. So it'll be interesting to see, in the United States, if ultimately, we can all agree or have a better idea to think maybe we've moved back into the mid stage and we're no longer in that late stage. Now, in Canada, a little bit of a different story. GDP continues to be, a little bit subdued. So, the probability that we're in late stage is probably a little bit higher than the U.S., but I think, we'll get a little bit more visibility over the next couple of quarters here.
And Andrei, you mentioned international equities. Can you expand on how, the international side of things could shine in 2026?
Yeah, certainly. We're continuing to see a pickup in interest there, and I think there's, as I mentioned, the valuation is a factor there. And just because something's cheaper doesn't mean you should buy it for sure. But when you're thinking about opportunities and risk rewards here, it's certainly there's a case there. I think what folks are thinking about is a little bit of diversification as well. We've had such a great run in these U.S. tech names, and I think folks are thinking about, most people have been overweight those tech names, those growthy tech names. Most people have been overweight the U.S. So just thinking about how they can diversify their portfolio a little bit more. International is certainly a spot where we're seeing interest, and I think those factors are a reason.
Absolutely. Now you talk about diversification. ETFs and our ETF product line could be one strategy where you could diversify your portfolio. How can an investor fold in ETFs into their strategy?
Yeah, certainly. And what's great about the ETF market is it's come such a long way over the last 20 or so years. If we rewind the clock back to 20, 30 years ago, it was primarily kind of a passive dominated market. When we take a look at the ETF market now, it essentially has everything under the sun. It's got passive, it's got factor, smart beta, it's got fully active mandates across a multitude of different asset classes, whether that's equity, your traditionally equity fixed income. There's obviously a lot of option-based strategies that are coming to market. So a lot of bespoke strategies providing different risk reward profiles. But also different ways that you can manage risk or set your portfolio up as well. So, for example, you may be overweight. You may be overweight in your portfolio U.S. equity growthy names, and there's many ways you could diversify. You could diversify geographically, look for international mandates. You can even diversify from a factor perspective. There's certain factors that have a weaker correlation, provide a little bit more diversification relative to growth names. So, for example, U.S. value historically. So you may want to add in some satellite positions to reduce some of your growth exposure and growth risk in that fashion. So there's a lot of ways to do it. Again, the market has grown so substantially that there's no shortages of ways that you can use ETFs to either manage risk in your portfolio, put satellite positions in your portfolio, take tactical views, and apply them through the use of ETFs. So again, it's a great tool to manage your portfolios, and there's a lot of different ways to do it.
And obviously, one way is to talk to your financial advisor, get started in the brand new year, and figure out, where you could diversify and strategize, obviously, in your investment portfolios. Now, Andrei, another big factor weighing on investors' minds are geopolitical risk. I mean, lots of headlines out there as we begin the new year. I mean, what should investors do and consider when looking at those types of topics?
Yeah, certainly. It's something that can play a big or a small role depending on the circumstance. Particularly when something pops up new. There's a lot of uncertainty. There can be people don't necessarily know what the downstream impacts are going to be. We can talk about the current situation in Venezuela, for example. Something that was cropping up is what does this mean for oil prices? And I think a lot of folks are trying to distill that and figure out what it ultimately means. Because there's what are the geopolitical implications, and then downstream of that is what are the implications to investing in financial markets. So certainly early on in those situations, there can be a little bit of volatility, a lot of uncertainty in terms of what ultimately is going to happen. So it does create some noise from time to time. It is something that we always think about. The issue with some of these events is sometimes you can't see them coming. And again, these events that crop up, your biggest kind of quiver or your biggest arrow in your quiver to combat these types of events is obviously diversification. If you are well diversified, don't put all your eggs in one basket. If something does crop up somewhere in the world geopolitically, you have that diversification in there to cushion any potential downfalls from the situation.
Absolutely. So lastly, overall, Andrei, as we look into 2026, what should investors keep top of mind?
Yeah, it's a good question. I mean, for me, at the start of the year, it always provides a good opportunity to take a look at your portfolio and take a look, where are my exposures? Where are my risks? What are the big risks for next year? You mentioned geopolitical risks there as well. Economy is first, top of my mind right now. Again, we're grappling here with where we are in the business cycle. And then in terms of, and then AI as well. A lot of us have been overweight. So the question is is this going to continue? How much longer is it going to continue? Should I take a little bit of risk off and diversify a little? Because, if we do, we have come a long way in those names, and pullbacks do happen. It may not be the end of the trend, but pullbacks do happen. So just questioning of whether or not we want to be a little bit more diversified on the equity side of the ledger going into 2026.
Andrei, thank you so much. Always a pleasure to have a chance to chat and get your insights and perspectives. Thank you so much.
Thanks for having me.
And thank you for watching The Upside. Remember, Upside webcasts air daily, so keep an eye out for your inbox for a list of upcoming shows. And if you haven't done so already, sign up for our Upside newsletter. You can also find The Upside and Fidelity Connects as video podcasts by searching Fidelity Canada on YouTube, Spotify, or Apple Podcasts. Thanks again for watching. I'm Emily Nuevo.
Thanks for listening to, or watching, Fidelity Canada's The Upside podcast. Subscribe on your podcast platform of choice so you don't miss an episode. And if you like what you're hearing, please leave a review or a 5-star rating. Fidelity mutual funds and ETFs are available by working with a financial advisor or through an online brokerage account. Visit fidelity.ca/howtobuy for more information. While on fidelity.ca, you can also find more information on future live webcasts. And don't forget to follow Fidelity Canada on LinkedIn, YouTube, Instagram, or X. We'll wrap things up today with a quick disclaimer. The views and opinions expressed on this podcast are those of the participants and do not necessarily reflect those of Fidelity Investments Canada ULC or its affiliates. This podcast is for informational purposes only and should not be construed as investment, tax, or legal advice. It is not an offer to sell or buy or an endorsement, recommendation, or sponsorship of any entity or securities cited. Read a fund's prospectus before investing. Funds are not guaranteed. Their values change frequently and past performance may not be repeated. Fees, expenses, and commissions are all associated with fund investments. Thanks for tuning in. We'll see you next time.